Everyone, thank you for joining Marble 6. We have a very special guest. In fact, I'm one of the disciples in this space for the Harmonic Trader creator. The man himself is here with us to share some of his journeys during his entire career as a trader. And we would like to, of course, ask him some questions about how long did it take to come with the harmonic trading technique. Everyone, Scott Carney is here with us.
Thanks for having me here today. Well, that's what is available today in terms of harmonic pattern information was nowhere. It didn't exist, quite frankly, before I started. And a lot of it was an adaptation of a lot of the studies I started with, Elliott wave, pattern recognition, Fibonacci ratio style stuff, and then even looking at indicators. And I was really, when I started out, I was looking at everything and saw certain strategies definitely had merit. Others were not so applicable to defining opportunities. I mean, I think that's also a big thought in the process is, defining patterns versus defining tradable, actionable opportunities is a big deal. And so, there's always been a lot of circus atmosphere, shysters, if you will, just in all of the methodologies. People would go around and sell methodologies and do quite well just selling their strategies. They still do it today, but I think today there's so much transparency out there. So if you're not putting up good ideas, solid ideas consistently, clearly you can't demonstrate what you're talking about. And I think that's always been a big deal for me of, kind of proof in the pudding for the work. But, in terms of harmonic patterns, where it really was, I guess we can say at least 25 years ago. The first book was released, The Harmonic Trader, that I did. That was roughly, it was like 25 years ago. And, that started to put together the rules and the framework, but it wasn't until subsequent work, like a few years later than that, where there was a greater understanding of situational aspects, important understanding of how patterns they complete, they are tested, they're retested, profit targets, all of that took years. So to say that we were I had the tools that I have today is just, it's nowhere close. And especially the software, which is the big thing that I'm representing, is harmonic pattern collection software that does everything automatically and basically makes the methodology possible in a way where I would say before the software, it was extremely difficult because you'd have to measure everything by hand. But with the automation, that opened up a lot of possibility, understanding, especially for new students. A lot of people would get discouraged because there was a lot of things going on, but since we've automated it, you can see clearly now the opportunities, confirmation, profit targets. So I would say that initial phase was like 7 years. That first, from pattern identification to execution and management strategies, that was probably like 7 or 8 years of tinkering, improvement, and it's always improving, but there was certainly a process to it. There's an understanding about it from the books, from the software, that took time. And I've had my various phases with the industry, with the markets in general. I started out just as a retail trader at a college, and I had some experience in college. I spent a summer on the floor of the Philadelphia Stock Exchange. So that's where really I kind of got the bug. And then coming out of college, I wanted to do something in the space. I knew that. I didn't know exactly what, but I started trading, part-time, very little money, early 90s, I guess. And then that just kind of grew gradually out of that beginning into kind of formulating ideas, getting with some local groups, and the whole harmonic thing was an evolution of that, where I was right after the internet really became a thing. We're talking 96, 97, 1998, especially, that I was starting to share ideas to an email group. And then that just kind of took off, the email list, because this was the .com era. So we were focused on bullish patterns mostly. And every .com stock that had some kind of retracement and formed a pattern usually worked out, because everything was so one-sided on the way up. So I guess that really got us hooked. I mean, got me hooked, got other people into it, that they knew something was going on here. And from there, I kind of expanded on the ideas, wrote for some websites. That was the other way that things really kind of took off. Started writing for stockcharts.com and eSignal, a few others. And before you know it, I had a sizable following. And I think that's because people hadn't seen the bat pattern, the Gartley like this, crab pattern, stuff like that a lot of people know today. And it was completely obscure. A lot of people thought it was astrology, but it was all about measuring movements. And that, I think, people could understand that. So once they understood the rules, they could grasp that, yes, the markets responded off these levels, these numbers, these patterns. And then usually folks wanted to learn more. And, it's evolved nicely. There were some issues maybe 10 years ago with some outfits that had no idea what they were doing. Some people even took my book and said, hey, we wrote this, we discovered the crab pattern, things like that. That was, that's just how it goes. I mean, it's always kind of been like that. But I feel like in the last 10 years, that environment has changed. I think there's super high quality folks doing stuff all over X, Instagram, other websites. TradingView actually has an entire harmonic patterns section on their website. So, we've come a long way from, me putting ideas in an email list to now, for sure.
That's pretty awesome. You said you wanted to create something different, and you have indeed, Scott. You have indeed. I stumbled upon your book sometime in 2016. Not the last book that you wrote, but the first one. After getting involved in trading, also my first instrument was Bitcoin. Right, I stepped into the game without knowing anything, like many of us did when we all started. And of course, after trying to digest so many other strategies, trying Elliott waves, I do have friends who are pretty good at Elliott wave trading. I pretty much, that's not my forte, but this is where I am. I read your book, and it was pretty much the only method that pretty much clicked, or it was the edge I needed when it comes to analyzing pattern recognition, right? There are many who call M and Ws for the sine waves within the price action. But what really differentiates an M or a W becomes to your harmonic ratios, right? That was the key differentiator, where I noticed that the pattern repeated over and over with the same parameters, right? The same congregation of ratios portraying in an M, right? For a bullish bat, a Gartley, or any of these informations, or a W. And of course, throughout the days, throughout the years, also I I believe I asked you on one of your streams about the anti-harmonic structure, right? Because that one was brought to the room I was before, and I was pretty much against it, because that ruins the entire process of what a true harmonic framework is, right? The natural ebbs and flows of the market, trying to be disruptive or to violate what a harmonic pattern is. And yes, I agree that there has been an evolution since the entire time. I mean, I've been reading all the books from the legends of the past mainly, and that's something that you also mentioned in your book, which I pretty much align with it, and also run into Mark Douglas' book. At the time I was learning harmonic back in 2016, 17. That was my time of the learning process, right? And one of the questions I would like to ask you, Scott, besides another few ones from your book, is that how long does it normally take to become profitable when it comes to trading? There is a period in between that we really need as an edge before we're trying to capture or absorb every information out there, right? Trying to apply all the strategies, but how long did it take you personally to find your edge as a trader?
Well, as I said, the information with the patterns and the understanding that took years, literally years.
Yeah.
Now that, someone has the tools, has the software that measures harmonic patterns, proper harmonic patterns automatically, the confirmation strategies, all of that kind of stuff. Even though I've distilled decades of material down to what I think could be comprehended in a month to 90 days, you do have to recognize that every person's going to need some chart time. They're going to need at least a month, maybe as many 3 months of consistent exposure to patterns, daily, weekly, 5-minute intraday stuff, just to get a feel of how the patterns work, how they unfold. I do think there's a couple of things where people need to understand some of the basic confirmation strategies, because even if we have a pattern, typically it's not a trade for me unless it has some confirmation aspects to it. So, there's a lot of things going on there that I think is critical to really understand what is a trade opportunity, like what kind of harmonic pattern is a trade opportunity, which all methodologies are trying to decipher a opportunity. You're trying to look at those opportunities to sift out the market movements, and then I define those segments, those profitability segments. So with that being said, I think anybody that's looking at harmonic patterns, if you're brand new to trading in general, I think if it's any methodology, you need to take a few months. If you know what you're doing and you're trading and you just haven't seen harmonic patterns, I still say you take 30 days of following it and integrating it to what you're doing.
Nice. Yeah, because there is a period for the learning process that many come to this space to only. You probably are familiar with the crypto space only, right? The get rich quick, taking one trade and becoming the next Jesse Livermore, right? Unfortunately, that's not how trading really works. You want to be consistent, right? By finding these patterns that repeat over and over and trade or take the opportunity that they present in the market. My next question is exactly from these competing forces, right, that makes the market come from your book, the Harmonic Volume 3 or the third volume, the quest for the equilibrium, right? The market is always seeking value, you mentioned there, with buyers and sellers trying to compete each other, right? Competing forces. And they're always trying to outsmart each other, right? Some of them come with the space saying my methodology is better than yours, and what truly is an approach or the main variable that differentiates between the two, the bears and the bull? Are you someone who approaches the market more in a neutral way? I mean, I already know you are, but what should be the ideal scenario or the ideal method or route per se for those new members or new traders that come to this space?
Well, I'm more alongside trader unless I'm trading futures intraday and we're trending, we're in a fairly consistent trend. We're in a pretty consistent uptrend and have been for the last 18 months.
Yeah.
I think that's also something where, um, what are the markets have been doing for as long as I've been in? They've been going up. They've gone down a couple of times super hard, and those opportunities will probably, we'll have another bear market someday. But I really favor the long side, longer term, because of a lot of the larger dynamics, population dynamics, money printer, Fed just blowing up dollar supply, especially after COVID. I don't think that that's going to change. It's going to be years to work out all that money that was authorized and put into circulation, and it will find its way to the markets. It always does. So, with that being said, I think, especially younger folks, you guys don't have a choice. You have to get involved with the markets. You have to make the money that you make more for yourself. It's
Exactly.
And what you guys have over us older folks is time. Time is your currency, even if you don't have a lot of money. The time now to learn, the time now to get the experience, so that you start making some money, and you find yourself where you're not 40 something looking for answers to your investment strategy, or what you should be doing in general with money. um I just think it's probably more important than ever before. The inequality has probably never been so extreme. Just in terms of what people need to do so that they're not left behind at the end of the game. You know what I'm saying?
Yeah, and there are some folks that are, regardless of age, are still making decisions based on some channels out there, right? And this is another question that I would like to ask about the how do you take the psychology and discipline? How do you handle emotional aspect of trading, such as, I don't know, fear and greed? How do you avoid the noise from something that is actually working?
I think a lot of it has to do with, what your experience, what your skill set is coming to the market. And so if you have, an understanding of the market, you're not in there operating in fear, which is, I think probably the thing that drives people the most. Um, I had a great fortune to know Mark Douglas personally, and spent a lot of time obviously reading his books, but talking to him about mental strategies, and a lot of things he shared with me were really helpful. I would even say he was probably the guy that really helped me kind of break through a lot of those barriers, and a lot of it came down to basically desensitizing myself to money and trying to see it more as a game of strategy than dollars, which it is.
That's
I,
amazing.
I think it comes with time.
I agree.
The only thing I'm going to add to that is that you start small. You start small no matter how much money you have. You start small. Your trades are small. Your wins are small. Your losses are smaller, and you build based on wins. So your whole focus is winning trades at first. The money always comes after that, because you need to build the experience. You don't want to be, stepping up to the plate with big money on the line, but you don't have the experience or know-how to make it happen. So it kind of gets back to how long does it take, kind of a thing. And if you're not willing to give it at least a few months, if not more, to really build those skills, then I don't think people are being honest with themselves, and they're probably going to lose money. So it's especially the crypto crowd. That's a
Yeah,
relatively new thing.
I
Um,
agree.
they got to learn it one way or another. They usually do, and but I think that's a common lesson no matter what you're trading.
I know, Scotty, you have very limited time, but I wanted to finalize with one of the questions. You mentioned that you started nearly the .com area, and that period, that phase within the market has been pretty much portrayed or related to the current market conditions. Some of them have been calling for a crash, pretty much at the October lows of 2022. That was rather a 50% correction of the primary trend within the Dow theory, and then we have the resumption of the trend that is currently taking place, at least in the S&P 500, right? And of course, among the Bitcoin and other trading instruments. But what is your current assessment of the market environment, given the variables that we have in the price action for the S&P mainly?
Well, S&P, I think it's still higher. I've got a target of like 5,600 this year. Oh, it's a big 1618 weekly extension. I think, we had 2022 was probably the low for the decade. And, so you're not going to see those prices again. I mean, you got to be thinking about where we're going literally the second half of this decade. Historically, markets bottom the second or third year of the decade, and then you make your disproportionate gains the second half of the decade, which we're coming into. The one thing that always hangs over the market is someone saying the crash is coming, the crash is coming. Yeah, there might be a crash, there might be a correction, but every time it's going to be an opportunity. So it's more about what you're going to do when that happens. But in the meantime, I don't, this whole 15, 20% a year over year upside, that's not going away anytime soon. I mean, that's where are we going to, where are people going to go? And where you only have, you got the money supply that was expanded dramatically during COVID, in the same way that it was expanded in 2008. Now, a lot of people said, okay, after 2008, it's total garbage. This market is fluffed up. Didn't matter. They had all the money in the world to kind of circulate it out there to keep it propped up. And same kind of a deal. Now we're 3-4 years post-COVID. That money's still authorized. And if anything, they've got the backdrop now where you've been able to, for the US government, that is, which is pretty much what dictates how much the market goes up, because the government's almost half the business, that they're not going to stop spending money anytime soon. So there would have to be some kind of massive black swan style, and I'm not just talking like a one-off event. There'd have to be a major kind of a situation that would fundamentally change the way things are traded, the way economies operate. There's a lot of talk that there are demographic challenges going on in the next 5 years, 10 years, but it's still a long way off. So with all of that, the markets still go much higher, in my opinion. And, like I said, I think you can generally account for the market to go up. I think 10% a year on average. You're going to have off years. You're going to have your 2022s, but those are usually big opportunities. So, I don't know what would the reasons be? That's my question to somebody that's saying that is, okay, you're saying the market's going to crash. Why? Why is the market? What is the reason, the precedent of why it will crash? And if someone can't explain that in less than 30 seconds, they're probably just acting out of fear for what they don't understand, or maybe something stuck in their brain that's got them attached to just that whole fear element of worrying about the market. I think if we learned anything in the last few years, no matter who's president, let's call it the last 6 years just to be fair, or 8 years.
Yeah, upcoming elections too.
Yeah, but it doesn't. It's not going to matter. It's really not going to matter, because you're going to have presumably better environments, one guy over the other, but in general, the markets are ripping, and the markets, you got hundreds of millions of people working towards sustaining and keeping free markets going no matter what. So people are still going to get up and go to work. Maybe they work from home more so than ever before. But the fundamental reason of why economies are driven, asset prices go up, none of that has changed. So unless we see interest rates spike to, I don't know, you see 10-year yields go to 7, 8%, 2-year yields, same kind of a thing where you go to 6 or 7. Where we are right now, I mean, 2-year yields are 5% and change or so, or just under 5 now. I think they've dropped. That in itself is not a big deal. If interest rates were spiking and we were going higher, then you could start to say, okay, something's definitely up that we haven't seen in decades. That was people's concern when it first started going up, but historically, rates have basically been where they are right now. And we've seen much higher rates in the market go like the 90s had relatively high rates, and that was some of the best market environment ever. So you got to be able, someone's got to be able to give me a reason of why markets are going to go down.
I agree. I tend to be more of the technical aspect, or I rather consider the technical aspect rather than the fundamentals. As Steve Nissen suggests, right? He puts it that the technicals are only a shortcut of what the fundamentals are pretty much telling. But that, to me, I mean, my particular view at least, has to be within the major time frame. That's where I normally have been finding these major turning points on monthly time frames, and of course, accompanied with major drawdowns after some very structures along the way that also comes with a narrative afterwards. But yeah, I agree. I think in my view at least, there are opportunities to trade, and our objective as traders should be only to take the opportunities, which I think is being misguided by many out there.
Yeah,
But
there's different opportunities, different markets all the time. As you don't get the same patterns, you don't get the same situations in every market. That is the kind of the moving dynamic about the markets, is that you have to have that understand that it's not going to be the same read every time, year over year even, and that does change. It moves in phases, best way to think about it. And we've just been in this definite markup phase as they continue to authorize the spending and pour more money into the economy. So I don't know, is there a 5 wave? Is someone projecting a 5 wave termination to what happened 4 years ago? I mean, I don't know, but
that seems to be the case now. I've seen some projections out there, but
oh, really?
yeah.
Yeah. I mean, listen, I've been talking about this for a long time, maybe almost a year, of the markets, NASDAQ, S&P 500, even Bitcoin, all making weekly 1618 extensions, advances. Yeah, and so the 1618, Bitcoin, that's 102.5 for the S&P 500. That's 55.50 on the index, like the SPY is like 560, and for the Qs it's 505. And it just, we're in a breakout. We're in an aggressive breakout. The measured move for that aggressive type of breakout is the 1618. So if we get to the 1618s and then we get all kinds of signals, it's the market rolls over or some other things kind of flash up at those levels, then maybe I'd look for a retracement or a pullback of some sort. But beyond that, market's not going to turn on a dime, and all of the election year cycles, all of that type of stuff, decennial cycles, have always said this is going to be a strong year.
Scott Carney, I'm very honored to have you here. This is extremely a new experience for all of us in the space. So I appreciate your time. I know we're running low on time here, but I'm looking forward to share this very soon, and I'll be linking or sharing the link to you as well. So I am very proud. I'm very honored to have you here, and I hope to keep in touch. Scott, thank you so much for being here. Truly appreciate it.
Thank you. Appreciate it. Take care.